Hello, everybody. Welcome to the VC Business Owners Podcast. My name is Hamza. I'm the Senior Client Manager here at Virgin Consulting. And today I'm going to be interviewing Omar. He's our CEO, and just picking his brain on the state of the economy and what actions he thinks that business owners should take from now till the end of the year. And for you guys who don't know Omar, I'm just going to do a quick little brief intro. Omar is a CPA. He's the CEO of Virgin Consulting, which is a top 3 CPA firm in Houston. We have several hundred clients across the country. He's also the principal founder and shareholder of V2 REI, which is a real estate firm that owns, operates, manages, and builds commercial real estate all around Houston. He also sits on an advisory board of over a dozen companies, ranging from healthcare, construction, real estate, manufacturing, and with revenues of 2 million to 50 million. So a wide variety of companies. And he comes with a wealth of experience in all aspects of business. So today we'll be picking his mind. I have some list of questions, and yeah, we'll go from there. So to kind of start off with our first question, Omar, what are your thoughts on the current state of the national economy, and then what is your thoughts on the local economy?
Thank you, Hamza. First of all, thank you for the introduction. Super excited to launch this podcast. I think outside of the tax, there's just so much knowledge that we can impart to our listeners on a wide variety of things within the business realm, which will include tax. And so I'm really excited to be able to go and talk about all these different topics and really impart some knowledge. So you want to repeat your question, Hamza?
Yeah. So what are your thoughts on the current state of the economy, the national economy, and then the local economy?
Okay. So being in Texas, Texas kind of has its own little ecosystem. So if we were anywhere else, it'll be a more of a fair comparison, when we're talking about national versus Texas or your local economy. But really, we have our own little ecosystem, and what the national economy doesn't always reflect what the local economy does. So let's talk about the national economy first, from a macro perspective. The national economy, we are in a recession right now. We are in a slowdown. The Fed has been more aggressive than it's been in generations of raising rates and just really trying to put a lid on inflation. There's a couple of different factors that are really taking place where some things the Fed has control over and some things they don't have control over. They can raise interest rates and they can reduce the buying power of investors, of the consumer, of business owners that are going to be opening more businesses or whatsoever. What they don't have control over is a supply chain. And so supply chain shortages was a big factor in inflation, which they were trying to combat. I recently went to a conference, an economics conference, and they basically said the fact that with demand globally slowing down, they're expecting the fact that supply chain, going into back end of 2023, going and beginning of 2024, is going to level out. So demand and supply are going to even out, and supply is no longer going to be that paramount driver of inflation. Right, so that aspect of from a national level will be more so mute. Now you have an aggressive Fed, and then you have a changing labor pool, right? So what do we mean by changing labor pool? What workers want from their jobs, from their careers, their choices with remote working, all these things are changing the labor pool game, right? And so from a national economic perspective, even at the conference, what they basically said is they're expecting the national economy to go in through a recession 2023. 2024 will also be, for the most part of the year, will be a recessionary environment. You can see, in anywhere from 5 to 10% reduction in business incomes across the country. But it's not going to be the great, oh my gosh, depression economic collapse that people were afraid of. You're just going to have a bit of a pullback on from a national level, right? Now from the state level, from Texas, for our listeners and clients who are in Texas, we are operating a different ecosystem. So Texas is looking to grow 4 to 6% annually, with people, more and more people moving here because of the of taxes, state taxes, right, and opportunities. Texas is pro-business. Texas has a lot of natural resources, has land. Even though house prices here have risen, drastically, almost 30+%, 40% over the last few years, it is still relatively cheaper than you would be if you're moving from Virginia or you're moving from other places in the country. So people are like, okay, well, I'm getting hit with higher taxes there, and then my house costs more, and everything costs more. So let me just uproot and move somewhere else. So Texas is benefiting from that. So Texas is going to have higher inflation because everything is constrained, and Hamza mentioned that on that, I'm also involved in the real estate side of business, and we're seeing that from everywhere where materials, labor, lead times for building, everything is constrained, right? Because there's so much activity happening, right? So that's a good thing and a bad thing. Good thing is the fact that Texas is, I feel, is going to have a milder recession. Whatever the national economy is having is going to be much less. Texas is going to have a much lower impact. It will be a recession, but will be much lower impact. Inflation, on the other hand, I think will continue to rise, just because you can't put enough boots on the ground to be able to match the demand that is required for all the construction that's happening. There's still a housing shortage. We're still in a housing shortage within the Houston metro area. We're in a housing shortage, even after you're at 7% interest rates. That's something to be said. So kind of recapping it, national level, we're going to have, we are in a recession. We'll continue to see a recession. The recession is more based off of Fed raising the rates, not off supply chain, because supply chain for the most part is rebalancing. And you'll notice that when you're going to go buy a car, when you're going to go buy a TV, those things that were basically like, super high prices before because there was not many available chips, laptops, you can readily find those available now. And so you see that balancing happening. But the price increases are being driven by the Fed, who is still trying to fight inflation. And then inflation really is coming from the fact that what's happened is businesses across the table have raised their prices through this past year and a half because of inflation. Just because their costs have gone down doesn't mean that they're going to bring their prices down now. Remember, once you paid X amount for a TV or X amount for a tire, X amount for a car, you're never going to see that price drop down just because their costs drop down. That's the new benchmark now, right? Now you add on the Texas impact on that, right? You add on a Texas impact on that. The Texas impact then increases inflation even more because the demand here is so high, right? So that's what I expect to see. So you'll see slower impact in businesses. Businesses are going to have, you're going to see the consumer being a bit more tighter, right? They're holding their wallet a bit more tighter. But we don't expect any kind of a major economic setback across national or Texas level.
Okay. Yeah, great explanation. I think that really gave us kind of a good insight on not just the national economy, but obviously our local economy for our Texas viewers.
Right.
Texas has a unique, situation. In your professional opinion, what do you think that most business owners should be doing currently? Given what you said about the economy.
I feel the fact that especially small business owners, which are obviously majority of our clients here, whether you're dental, medical, or any other industry, I think that because most small business owners' mindset is really just really looking at the bank statement, right, and that's what they kind of judge their business off of. I think that they prematurely believe the fact that the quickest way to make a profit is to reduce costs, right? And I don't think that in this economic environment, that's really the right move to make. I think the right move to make is really understanding your business, understanding, your patient needs, demographics and so forth, and investing more heavily in marketing and improving your processes, right? Making things more efficient, the patient experience, the client experience, right? Investing in those areas to be able to offset any revenue loss due to those consumers that are not going to come back to you, right? Because they're holding their wallets tighter. The second thing is really have a very good understanding of your liquidity, of your cash, of your runway, right? All small businesses basically have a runway. It's like a plane taking off, right? How much runway do you have? Day in and day out through my experience, and obviously I share with our viewers because same thing. I'm a small business owner, right? And each day the amount of runway that you have is the amount of confidence that you have. When you all of a sudden see the cash balance on your banks lower, then you're gonna make a lot more wrong decisions. You're gonna make decisions that you shouldn't make. You're gonna cut places you shouldn't cut because you're really looking at a short-term outcome. You're looking at a short-term outcome, and the short-term outcome is always gonna give you a long-term deficit, right? I've like Hamza mentioned, I'm also a part of a lot of different companies as board advisors, and I've seen those companies freak out and start like laying off people, and then all of a sudden they get a couple of big orders or a couple of big things, and they're like, oh shoot, now what do we do, right? Well, it's going to cost you double now to try to go and refill those things, or I'm going to cut marketing, I'm going to cut this. I think most small business owners, because especially in our fields, have such great margins. You really want to focus on the margin side. You really want to focus on the pricing side, the fee schedule side, right?
Yeah.
If you save a couple $100 on the bottom line, that really won't take you far. And you won't make wrong decisions if you have enough liquidity where you can think clearly and not in panic mode. We all make not the best decisions in those when our mindset is like that.
That makes a lot of sense. Being a real estate investor yourself, what's kind of your advice to clients that may be looking to get into real estate this year?
If you're getting into real estate for the tax benefit, then the ROI makes sense. And typically that's, if you're going into that real estate for the tax benefit, you're typically, it's going to make sense if you're investing in, 1.5 million plus, right? For those smaller properties, the deduction is smaller, and it's not going to make a lot of sense because your interest rate is 7%, right? For the number one, number two, if you're looking to buy, make sure you're buying for the long term, make sure you're buying for the appreciation, because you're gonna have a very hard time making any money right now in this market as far as getting a loan, and after all the expenses are done, you're not gonna have much left. So either you're buying it for tax deduction, and you're buying it for long-term appreciation, and you have a game plan that you're gonna build something on there, you're gonna tear that down, and you're gonna make something better that's gonna be worth more. But if you're just buying for the sake of the following the crowd, if you want to say, you may find yourself in a deal that you don't want to really be in. If you're getting into real estate, make sure you have adequate liquidity, so that when things turn, or if you have tenants that aren't paying whatever, as we are going to go into 2024, like I said, we are going to feel a bit of a pinch. Then you're not in a cash flow situation where, oh, I can't pay the bank now, right? If you're going to go into real estate, be educated, understand your market, understand why you're buying, and it's perfectly fine to buy for tax deduction purposes. Sometimes analysis makes sense just to buy a loss proposition, just because the deduction on the real estate side is so high that it's going to make up for the ROI on the property. And then once things level out and interest rates come down a little bit and everything, and rents increase, and your margin will get better, But you don't want to be stuck in a situation where you bought something and now 4 years onward you got to sell it, and you have to pay broker fees of 6% on $1 million. That's $60,000 plus all the losses that you had before. all of a sudden then you're kicking yourself, like, why did I ever get into this? I should have, done
Mhm.
something.
With bonus depreciation slowly phasing out, do you have any kind of comment on timing of real estate purchase? Do you think anything about that?
Again, if it's for tax deduction purposes, I think this year is the last year that makes sense to buy for tax deduction purposes, just because of bonus depreciation. Um, it's interesting you mentioned that because there's legislation out that's being drawn up now by the Republicans where they're trying to extend bonus depreciation in 2025. That's going to be Democrats are obviously like, no, heck no, no more tax breaks for businesses. Republicans are obviously trying to stimulate the economy and get tax deductions. So if that somehow gets past Congress and that 100% appreciation bonus comes back to 2025, you're going to see real estate go take a again step higher. So it's an interesting 6 months that we're going to be playing a little bit of a tango. But I would say the fact that if you're looking to buy for tax purposes and the deduction makes sense, right, that you're going to get, and you're okay with the low to minimal ROI on the rental side,
Mhm.
buy this year.
Okay.
Next year's going to be 60% bonus depreciation, and then it just starts getting lower and lower. And unless you're just getting a steal of a deal, which is really hard in this market, then it's going to not make as much sense next year and the year after at 60-40% bonus depreciation.
Gotcha.
Mhm.
What advice do you have for our dental practice clients?
For dental practice clients, I mean, again, dentistry is a very beautiful business because it's really, it's consumer driven. It's something you need, regardless of what's going on. When you're in pain, you got to go to the dentist. So our advice has been the fact that stay steady on the course, focus on growth, focus on top line, focus on anything and everything that can bring in more through the front door. Invest in marketing. There's very few dental practices that we see that have such a obese overhead that the first thing when we go in, we're like, oh, you got to cut the fat.
Mhm.
It just doesn't, I mean, there's very few scenarios like that. Mostly dental practices are run lean. Most of the time, a lot of times, the dentist himself is doing a lot of the hygiene work, right? So there's not, I mean, if you're gonna cut fat, there's not a lot of fat to cut. Maybe a couple $1,000 here and there, right? So my take has always been the fact that aggressively focus on marketing. And think about that $1. Okay, if I put it in the bank, it's going to give me 4%. If I put it in the stock market, it's going to give me maybe 4 or 5% this year, right? But if I put it into marketing, I can earn maybe 12-13% in my practice or more, right? And if I lose that, fine, I'll try something else. And the mixture of trying different things will eventually get you to the collection goal that you have. So it's okay to lose money on marketing. We all have then joined a company or program or done something where it didn't work out. Fine. At least this doesn't work now. Now let me try this. Right. But keeping my advice to our dental practices is keep your foot on the gas. Right. So if things are slowing down and they are going to slow down a bit and you're kind of going like this, you want to basically just put the gas and just, get yourself more momentum. Right. And that's the best way to navigate this current environment.
What would you say for our medical practice clients?
Medical practice clients, obviously, the marketing and investments is a bit different, right? So for those clients, I would still focus on top line growth, but I would look at are there synergies? Are there synergies that can be made between your practice and other providers, right? Other ways that you can connect with other associations or so forth to be able to bring in more referrals, right?
Mhm.
And focusing strongly on your cash flow, right? Medical practices a lot of times are not able to get that full collection amount, just because of all the intricacies with the billing and so forth, insurance coding and so forth. So really focus on those aspects of it to make sure that you get every dollar that's really owed to you.
Okay. Given our broad client base, are there any trends that you've seen across our client base that concern you that you want to kind of mention?
Not concerning. I think during the first quarter, when we kind of our associates have been talking to their clients and so forth. Everyone saw a bit of a not everyone. I would say 50% of people saw a bit of a pullback and as far as revenue and stuff goes, end of Q1 going into Q2. Nothing drastic, but that 10%, 12% so. So is that concerning? No, I think it was more expected. Um, and the portion I would say would be concerning was more the mindset when we were talking to a lot of our clients and everything was, that a lot of them were solely thinking that the answer to the recession or slowdown in patient fees is what do I cut costs, right? And that's why I think we were trying to do a lot of education around you're a top line business. So think top line. It's going to make a lot more sense if you can grow the top line by 10%, that's $100,000 versus if you're spending so much energy trying to cut the bottom line, you may say 5,000. So we did see some it was a bit of a slowdown. But in a recent a month or two that we've been talking to our clients, we've seen it's been leveling out, and I think and that's what I think is going to happen. Those people that need to get their treatment done, but they canceled, right, or they're rescheduled because of cost purposes, they're going to come back in Q4 because at the end of the day, they still got to get the work done. So I think it's really being on top of your recalls and being on top of your outreach to those patients, right? To try to get them into the office and showing them the treatment plan.
Yeah. So we discussed a couple of points. We talked about the economy, real estate, kind of business, and how to manage business. What would be some takeaways that you would advise our clients to have, our listeners to have from kind of listening to this podcast and this all the comments you've made?
I would say that so be aware of the forecast, right? The forecast is when we're aware of a forecast, we're less surprised, we make better decisions, right? So already put it to bed the fact that okay, we're going into an environment where you're gonna have some slower growth. You're gonna see some slower growth. You're gonna see some specifically in our local economy, you're gonna see some higher costs, right? You're gonna see your rent go up, your triple net go up, those things go up. Be prepared for that, right? That's takeaway number one. Takeaway number two, feel very confident of your cash position, right? Feel very that way that if you have some ups and downs, you're able to make good decisions with a clear mind because you have enough liquidity. Takeaway three would be take a look at your goals. And if real estate is something that you want to go into, then this is a year to do it. But go with the understanding that most probably it's going to be a tax deduction play, not a ROI play. Fourth takeaway would be the fact that mindset. Really focus on the top line mindset. Focus on understanding how different marketing plays that are available to you, investing in those, and being okay with the fact that I'm going to lose in some of these different market strategies I'm doing, and being okay with that's just a cost of business. But you have to do it. If you don't, if you're not aggressive enough on the growth aspect of it, then the recession will trim a little bit of from your top line, and you're gonna have and with the cost increasing, you're gonna see a double whammy, which is so our advice can and my last point is the fact that hit the gas, right? If you see you see this horizon coming. Go harder at it. The point I forgot to make was the fact that so based on the economic meeting that I went to with all the other CEOs, they said the fact that 2024 is gonna be slower, but they're expecting 2025 to be ramped up. So it's gonna come back up. So 2023 to 2024, the 18-month window that you have is where you want to really fine-tune your business. You want to fine-tune your business. You want to fine-tune your practice. You want to fine-tune your processes, your team. How does it work? You're fine-tune your marketing, right? And what works, what doesn't work, and have all that structured properly, right? And it takes time to do those things because so that when 2025 comes and that really big growth comes again, you're ready for it versus overwhelmed by it or missing the train. So we have an 18-month window where we're, we've got some scattered showers, but afterwards, then we expect to see a positive continuation of the uptick of the local and national economy.
Okay, okay.
Mm.
Thank you for providing your insight. I think it's gonna be really valuable to our listeners. I'm excited for our future, episodes. I know things that we'll talk about is kind of growing your business value, real estate strategies. I know you talked about, obviously, there's things that could happen in Congress that could obviously shift that, and obviously we'll have updated episodes on that. And then just, another update on the outlook of the economy. So I know we're gonna have a lot of future episodes, which I'm excited to talk with you about, and I'm excited for our viewers to hear all about that.
Awesome. Thank you, Hamza.
Awesome. Thank you.
All right. Bye-bye.